Good morning, everybody. Welcome back to another episode of The Market Open. It is Thursday, July 25th, 8:45 a.m. And we've got a continuation from yesterday of a red day. However, we got some news literally 15 minutes before we went live today that has diverted some of the red and diverted it quite incredibly. The question is going to be when the market opens, how red do things actually get? So we've got a lot to get into, a lot to talk about. Tom Lee was on CNBC. He is once again preaching the small cap thesis. We'll take a look at his argument and kind of why he's saying what he's saying and the argument that he's going for. But first things first, we have GDP data that came out for Q2. Again, came out 15 minutes ago, and it's good. It's actually really good. US Q2 GDP comes in at 2.8% versus expectations of 2%. Last quarter, by the way, it was 1.4%. So it doubled quarter over quarter, and it is 800 basis points above the expectations that we have right now, or the expectations we had for Q2 at 2%. As soon as this came out, I don't know if you guys were looking at the stock market. Maybe you were. I was taking a little peek, a little gander at the stock market. I like that word, gander. That's a new one. I haven't used that word in a while. A little gander at the markets. Robinhood was $20.85. Now it's $20.93. At one point, it was $21.11. Palantir was $25.87. Right now, it's at $26.05. You got Netflix that's actually green. IWM that's actually green. Chipotle, good earnings yesterday. It was up 14%. Then it came right back down to 51. That's green by about 2%. S&P is actually green. We were red before the GDP data came out. Financials are green. Other companies that were, deeply red, they're starting to get a little bit less red. It's pretty interesting. Nvidia was at 112. Now it's at 113.38. So I think the market's trying to reconcile, okay, we were ready to sell off again today. At least the pre-markets, if you woke up in the morning, you looked at your portfolio, you were like, all right, it's day two. And we're going to talk about the significance of how bad yesterday was from the numbers, because yesterday was not only the worst day from October 2022, it was the worst day on a points and percentage perspective in terms of how bad the actual indices fell. So if you felt the pain yesterday, it was because yesterday was a bad day. So the continuation of yesterday seemed like it was starting at 8:30 until we got GDP numbers. Now, my thoughts on GDP numbers is that I don't know if that's enough to get the market excited. The argument for why, if anyone's wondering, well, why should GDP be enough to make the market bounce? It means we're growing. It means we're growing. If we're growing at 2.8% a quarter, with the expectations to be maybe 3% by Q4, it means that the economy is growing, that AI is a tailwind, that productivity is increasing, that more jobs are being added, even though we know jobs are not being added. So the current jobs we have are being more productive. So we are adding more to the broader economy, which means overall the market theoretically should be benefiting from that. And so if that's the case, that is why stocks are up, right? Earnings will do better if the market goes higher, if GDP goes higher. However, I don't know if it's enough to stop a little bit of the bleeding that we're seeing right now. Lucky says your volume is a little low. Let me know if anyone thinks my volume is low. I think it should be okay, but if not, I will try to adjust. So we'll see. We'll see what happens as the market opens, but this is going to be very interesting now that we got these GDP numbers. We have core PCE tomorrow. So if core PCE comes in lower than expected, then we've got inflation coming down. We've got GDP going up. That is, again, the Goldilocks zone, the soft landing the Fed wants to be in. And that should theoretically create a scenario for rate cuts, which allows the market to rally. I'll give more of my thoughts on where I think the market's going after we hear from Tom Lee. But these GDP numbers are pretty damn good, dude. If these GDP numbers miss expectations, if we came in at like 1.8, 1.9%, it would be worse than a bloodbath, dude. Because that means not only do we have to cut rates, that means we would probably be cutting rates in a reactionary environment to a weak economy. Because if we're not growing and then we're cutting rates, we're trying to stimulate the economy, which means the Fed missed the boat. It would have been very obvious. So thankfully, it seems like that's not what's happening right now. All right, let's hear from Tom Lee. Let's get his thesis. He thinks the big tech sell-off is not that big of a deal, but he does think there will be a rotation. So let's hear what he has to say, and then we'll keep going from there.
An introduction You're going to give us a little bit of that today for our wounds from yesterday, but not entirely, because you think the S&P is probably going to be flat for August overall.
Yes, that's right.
And that's unlike some of your recent calls about the S&P with friendlier inflation data. You've made some calls about some big near-term moves. That's not what you're saying today, unless you're talking about small caps.
Yes, that's right. I think part of what we saw yesterday was, the rotation that's painful away from large caps. And I think Tesla earnings and Google sort of accelerated some of that. And I think there's been some uncertainty about the Fed's commitment to cutting, even though we expect inflation to fall like a rock. But when the Fed starts cutting, that's good for small caps. And there has been, I think, overseas, some unwind of that Japan carry trade that's hurt the NASDAQ. Mm-hmm. But to me, this is why the S&P had a great first 6 months. Maybe it needs to consolidate those gains. But now Russell 2000 has an 11 median PE, earnings growth 800 basis points faster. And, it just posted 11 days where 10 out of 11 days had a 1% move. The 9 times it did that since 1979, when you weren't in a bear market, we were up 100%, 1 month, 3 months, 6 months, 12 months later. 12-month average gain, 40%.
You're very popular. And I would warn you, this is not good that you're saying this. You think this rotation has been driven by expectations of a Trump White House? Is there another way you can say that? Can you come up with something else so you don't have to delve into the political side? You think Trump's going to win the White House, or you think the market at this point thinks he's going to win the White House?
Yes, it's the second. Betting markets are putting a 65% probability of a Trump White House. The biggest beneficiary, which is deregulation, M&A, regional banks doing better, that's small cap stocks.
Okay, so that's the linkage that you're seeing then. So you really think we've seen a Trump trade, and even after, the betting markets have moved somewhat. He's come down. Vice President Kamala Harris has moved up a little in the betting market since the weekend when the news came out. You still think that that's at play from here on, not just to explain the rotation that we've already seen? You think it's going to continue? That's
right. So I think it's from this point forward, there's a lot of opportunity in small caps. Part of it is that there's a lot of overlap. When the Fed cuts, that's lowering cost of money. That's good for small caps and the regional banks. It probably boosts CEO confidence, which is M&A, and that benefits small caps. So there's a lot of overlap between a Fed cut imminent and a Trump White House. And that's why I think the interplay is positive for small caps.
Do you guys agree with that thesis? Today's the day I want to see who actually agrees, because when the market's down and everything sucks, do you still believe in the small cap thesis that he has? Again, he thinks end of August or like end of September, basically 10 more weeks, small IWM closer to 300. Who actually thinks that could happen?
Interesting. So
I still don't understand. You don't think the large caps are done. You just think it's a slowdown for the S&P 500 on a broader level?
Yes, that's right. I think the Mag 7 was very attractive at the start of this year because growth was scarce and they've had great visibility and they're not expensive. 27 times earnings isn't demanding. But now that there's a visible catalyst for small caps, I think investors are taking some profits up. NASDAQ was up 20% and putting it into small caps.
We were talking earlier, though, just about the Mag 7 in particular and the spending on the cloud. If Alphabet's results are indicative of what we might hear from Microsoft and Amazon next week when it comes to the cloud, where they are spending a lot more than they're able to bring in at this point, is that a problem? Is that because it feels like there's a little bit of a sentiment shift, too?
Yeah.
Even if it's a brief one and early on.
I agree. I think perception is really important for equity valuations, but the money spent by these companies on AI has a high expected return because they have moats that are getting stronger, and there aren't companies like this anywhere else in the world, so they're very scarce. So I don't think it's wasted capital, but if investors want free cash flow or if they see 11 PE stocks and small caps, that's what's becoming incrementally attractive.
So a flat S&P, but a Russell or a small cap gain of 15% in the month.
Yes,
possibly.
That's That's right. I think for the month of August, small caps can do something more than 15% even because they've underperformed so dramatically. And the type of move we've seen just in the last 2 weeks is something that only happens at the start of a pretty significant advance for small caps.
Do you think that the earnings that we see for the big caps, will they continue to confirm your case that maybe could anyone blow their results out of the water and change this for big caps and say, wow, we're wrong, things are still okay, so that it doesn't, because yesterday was 600, whatever it was, 600 plus points. That had a lot to do with earnings, not completely. It seemed like it was ready to happen anyway. But do you think there would be any surprises that are better than people thought in that group?
I think so. I mean, at the end of the day, I don't think these companies are not capable of positive surprise. A lot of good news was baked in. You know, the line in the sand ultimately will be NVIDIA when they report, which is really the last one to report. You know, I think over the next 10 years, the outlook is still really good for all these companies. So I don't think investors should lose faith, but profit taking kind of makes sense.
That's okay, great. I think we can continue to have you back on because you've been so good.
Okay, so we got a lot to talk about in terms of what he said. First of all, yes, this is good for SoFi. Those that are asking that question, if SoFi crushes next Monday and we get a small cap August in terms of what Tom Lee's saying, and the rate cuts in September, I think as long as the market does not hate SoFi like they've hated them for the beginning of this year. By the way, their short float just decreased by 1%. Palantir's short float actually increased. SoFi's went down. Then I think it would be good for SoFi. So new Palantir float is 4.17%, still a relatively small amount, but it increased by 1.56% over the past 2 weeks. And then SoFi went down by 1.08%. So it's still 18.4%, but it's not as high as it was 2 weeks ago. So Palantir went up, SoFi went down. Now, in terms of what Tom Lee's actually saying and the arguments that he's kind of putting out there, last time he made such a specific call like this was, well, there was 2 times. One was July of 2023. There was a week I remember where he said S&P to 450. I think S&P was at like 435-ish the week before. And he went on a Monday and he said, by the end of the week, we're going to be at 450. And it was a very tactical, it was almost like he told his clients to buy like weekly call options on the S&P to 450. And he was dead right. And the reason he was right, and I'm saying this to bring a little bit of context to his analysis here, because I know on a red day, when someone makes a prediction, everyone hates them because, you know, it's hard to like see through what the argument they're trying to make. But he was using a string of different factors around inflation coming down, the market's perceptual reaction to that inflation coming down, and then if hikes would pause or stop. And he was right on all, or pause or hike. And he was right on all 3 of those elements by the end of that crucial week in July. And so he got his prediction right. Here, he's making a variety of arguments right now in the context of where the market should go based on this idea that the large caps, Palantir 2613, we're seeing some of these stocks recover now because of that GDP data that we got Robinhood back above 21. And then, wow, IWM, look at that. It's up 0.63%. Let's see how it opens. He's making a variety of arguments based on the fact that large cap tech has already had such strong earnings that now the earnings that they produce, aka Google, which is the perfect example, they will produce good numbers. They will not produce numbers that are like Q1 or Q4 2023, where you look at it and you're like, oh my God, how is this trading at a 22 PE? I have to buy it because this is incredibly cheap. Google beat on the top and bottom line, but Google spent a crap ton, $13 billion on CapEx. And they explicitly said, we do not see the monetization of our capital expenditures on AI infrastructure, particularly through increased revenues. Otherwise, they would be growing more than 14% year over year, because it's taking time for CapEx to build out. So what are they actually seeing? Like, for those that are wondering, okay, so Google's spending $14 billion a quarter. What the hell are they actually getting from it? Advertising is getting more efficient. They have a lever on your advertising. I forgot the name of it, but it's like Pro Max or something that advertisers can choose to turn on. And when you turn that on, your ads get 25% more advanced or better at like capturing users and converting. You have to pay more for that, but in general, that makes their ads a bit better, right? So that's one thing. Number 2, their cloud efficiencies get better because of their use of AI through a variety of different workflows that they deploy through their cloud. So that's really important, not to mention GCP's AI cloud in and of itself. And then third, internal efficiency. So like the company gets more effective. What's a tangible example of this? What if it's an employee that has a question around a specific way they should interact with a customer that they're working with, that they're trying to close on a deal for them to buy $1 million worth of YouTube ads. Before they go to their head boss that goes through 7 different email chains to get the answer to, give a direct response to like a big buyer of ads, they would just ask an internal LLM, right? An AI that is trained on a ton of data around how to interact with customers. You would say, hey, the customer has this concern, or they have this question around how they can get this type of discount if we bucket the deal in this way. How do I proceed? And those internal efficiencies that are happening in Google, happening in Salesforce, Mark Benioff was talking about this yesterday, that creates a more productive organization, which is why we're seeing GDP probably go up 2.8% versus 2% for those that are just joining. So all of those productivities and efficiencies are good, and that helps Google, but that is not creating massive revenue gains that the street wants to see if you're spending $14 billion. Right now, the street's getting to the point where they're thinking, hey, are you spending what Zucks was spending on the metaverse 2 years ago with no ROI? And I think Tom Lee's argument, Dan Ives' argument, et cetera, is like, no, they're spending, the only companies in the world that can spend this much on something that is valuable. It's just going to take time for that value to accrue. And the question is, how forgiving are the markets while we wait for that time for AI to be valuable? And so until we see that, we're going to have to see, where it plays out and how it ultimately plays out in the coming weeks. Midwest says, talk to you guys later. My parents just backed in the drive. He's 90. She's 79. Awesome. I love it. Thank you, Midwest, for being here. Enjoy your time with your parents. Good morning to everyone. Walter, good morning. Thank you for being here. So I think the big question is going to be, where do we see the AI expenditure come from? And when do we see the results of that AI expenditure in the context of monetization? And if we see it in the next couple quarters, I think the story gets very exciting quickly, because we're going to see Google, Meta, Amazon really show the revenue growth. If we don't see the monetization of AI, same thing with Palantir, right? If we don't see AIP actually produce revenue, not just, customer conversions from boot camps, then the street's going to be wondering, where's the revenue? Here's some context for how bad yesterday was, because yesterday was bad. I'm not going to underplay how bad it was. Here's the argument for why yesterday hurt so badly. So today, the QQQ was down 17 points and 3.59%, which was the worst day since October 2022. We all know that. However, if you go back to October, November, and December of 2022, you will see 5 days where the QQQ was down 3%. That's how bad those 3 months were. Can you imagine 5 days of the NASDAQ being down 3%? However, none of those days were down 17.2 points. The worst day was down 10.6 points. In order to find a worse day for QQQ in terms of price and point terms, you'll have to go back to March of 2020. That's why yesterday felt so bad, because we have not had a day as bad as we're seeing right now since 2020 in terms of actual points down. Even if you go back to March 2020, there were only 2 days worse than today. So this is kind of why the NASDAQ felt so bad. A lot of us are in tech stocks. That's why a lot of us got hit yesterday, because tech stocks took a tumble for the first time, not only in 2024, but really for the first time since March of 2020, and definitely for the first time since October of 2022. Now, a little bit of context in terms of stocks peaking and people that want to call a top to this market. Stocks haven't peaked in July, or they've only peaked in July 3 times in history. So since 1950, there have been 3 years where stocks have peaked in July. 30 times in December, 8 times in November, 6 times in October, 5 times in September, 12 times in January. But really in July, you don't get the peak. So for those calling for a top, maybe it's in August, maybe September. More likely, given we're getting into a rate cut cycle with the election, probably in December if we do get a peak that may last for a couple more months. But I don't know if July, I don't know if 56.5 was the peak on the S&P, given the tailwinds that we're getting into. So we're going to see. We're going to see what happens. Trader Status Quo says, doesn't percentage matter more than points? Yeah, percentage definitely matters more than points. It's just giving a little bit of context of how bad yesterday felt, right? Why it felt like it was so much pain. It's because even though it was down a similar percentage point that it was 2 years ago, the number of points it fell, meaning if you bought closer to the top, you just fell more points. Obviously, because the index has also gained a lot over the past couple of years. That's why it was a bloody day. And so now I think today in 25 minutes, this is going to be one of the most consequential market opens that we've had all year, Thursday, July 25th, because the question is there a rebound? is there really a rebound baked in? For those that are just joining, we got GDP data, came in 2.8 versus 2%. That is really good for the market. If the market had not sold off dramatically yesterday and we were kind of still in that uptrend of green, I mean, S&P would probably get closer to 570 because we topped out at 565, because that number is just incredible for the broader growth argument that we're having in the United States. And I think that's because of AI. I mean, I don't know why we're topping GDP estimates outside of just some type of macro tailwind, but market, is reacting to it. Palantir right here, 2603. It was at 2587 before we got these numbers. I think we gapped up to 2617 as well. As you can see right here, yeah, we were low right here at 25. We went all the way down to 2573 in the pre-markets, came up to 2617 after the GDP data, now back at 2603. The question is going to be, how ready is the market to accept those numbers and then not sell off everything again as the market opened. Google said AI revenue isn't consequential, so it's not AI. Well, no, it's not that AI revenue isn't consequential for Google, but AI is definitely consequential for their internal productivity, which is what like the real measure of GDP is at the end of the day. Like if we're not adding more jobs, which we're not, right? We are technically adding more jobs, but every month we're having more job openings and more people filing for unemployment. So it's not literally new jobs just adding to GDP. It has to be that the jobs we currently have are being more productive. Like there's no other way around it. It's like jobs have to be delivering more. So again, AI efficiencies inside of the organization are helping. Bank of America had a great study on this a couple of weeks ago as well, that productivity is at the highest level it's been since 2007, probably because of AI. But the actual AI revenues, like monetization of AIP for Palantir, that is not really here yet. And until we get that, I think the market's a little bit concerned, when AI is going to catch up to all the hype. However, I don't think this is the time to break the narrative and say, oh, AI is hype and it's gone. I think that would be taking away years of research on the subject, years of understanding what is happening with these foundation models. And it's kind of one of those things you just say on a red day because you feel like everything's falling out the sky. But if you listen to another Jensen Huang keynote and explain what his vision is for accelerated computing and what it means for the trillions of parameters that are going to be created on these LLMs, Meta just put out a $450 billion, not dollar, but 450 billion parameter LLM the other day. These models are only getting more sophisticated and they're going to be more productive at the end of the day. And the question is just going to be, is the use case living up to the hype? And I think if we see that use case living up to the hype, then AI obviously is still going to have some momentum. Oil is down another 1.35%. Again, this is really, really good for the broader markets. And this is really good for inflation coming down. It's all but inevitable, in my opinion, we are getting a rate cut. I mean, when you see oil like this, it's very hard to imagine we're not getting a rate cut. But the question is going to be when that happens and how that plays out. And if the market responds positively when we get the rate cut, which I think they will, but we will see in September. Good morning, Amit. Have you watched Hillbilly Elegy yet? No, and I haven't listened to Tool yet. And I watched a little bit of Hillbilly Elegy. Over the weekend, I watched like the first 10 minutes and then my ADHD kicked in and I had to go do something else. I got kind of bored. I'm not going to lie. It was kind of boring in the beginning, but I'll probably finish it. And then Tool, I still have to listen to Tool because I've not listened to that iconic rock band yet. Netflix up a little bit in the pre-markets. IWM is up. Chipotle is up. Let's see earnings we had this morning, if we had any important ones. After the bell today, we have a couple others as well. So this morning, yeah, we had a bunch of earnings. Royal Caribbean, oh wow, they had earnings. So they beat by EPS 16%. They beat by revenue 1%. Royal Caribbean should be doing well since Carnival did well. Yeah, so Royal had a pretty massive EPS beat. They're barely up right now because the entire market's red. So this is also the thing that sucks for Palantir and Robinhood. I'm going to be dead honest here. I was expecting a good earnings for both. I was expecting a really good earnings for Robinhood, given their valuation. Palantir already ran up, so I was expecting a good earnings, but not like insane earnings because I think this is not the quarter where they really crush it yet. Now, I just hope we don't tank on earnings because if we stay in this trend of August being a bad month for big tech and a little bit of a rotation into small caps, if Tom Lee is right, maybe Robinhood gets some of the benefit because it's an $18 billion market cap. I know that's not a small cap, but it's definitely smaller than Palantir and definitely smaller than some of the other companies. However, Robinhood is a call in the market. So if the markets go down, then I don't expect Robinhood to benefit, even if they have a great earnings. And then Palantir at $26 is just going to be hard to justify a run to like 32, 33 that people thought was very possible when it was at 28, 29. even if they have a good earnings, if big tech does not follow with it. Palantir would have to put up such incredible numbers, like such astronomical numbers, that the street can't deny it. And even in a red market, they would give them the momentum. As of now, we're going to be lucky to hold 26, in my opinion, if the numbers are somewhat decent. Because if things are selling off, then it's just going to get a little tough to see what happens. So I don't know. We will see. We will see kind of how it plays out. But definitely the party, as Dan Ives saying, the party's just getting started. The party may just be getting started, but the vibe shift in the party, even if we're past 9 p.m. and it's 10 p.m., has changed, at least for the month of August. I mean, and Meta and Microsoft might change that when they come out with earnings and they say, hey, we are crushing it, we're doing well. Maybe it was a Google situation. But if Meta and Microsoft all say the same thing, that we're spending on CapEx, we're not really seeing the return yet, you got to give us some time. This is real. It's just coming. And again, Google spending $14 billion. I think Zuck is going to spend like $7 billion. They're not spending it for fun, right? They're spending it because they obviously see some type of ROI coming down the future. It's just they can't give you an ROI immediately. And if they can't give you an ROI immediately, that's where the market has to be patient. But the market might not reward them, even if the market's going to be patient with their stock prices. Here's Kramer on Tesla yesterday. This is another reason people are saying that we might see some weakness in Tesla.
Perhaps you have to buy this weakness because of the future, which seems very bright. I actually think that makes sense, at least as a place to start buying. What matters is that you have to wait. You have to be patient. You have to be long-term oriented. Trades that are in short supply on Wall Street. As I see it, the key risk with Tesla was that Musk might leave over his pay package. Now that he's staying, I recognize that he's just better than everyone else when it comes to envisioning the future, perhaps with the sole exception of Jensen Huang from NVIDIA, who is also, by the way, a lot more fun to hang with. Still, Musk bankable, and the rotation out of the Magnificent Seven could give you a chance to put his genius to work for your portfolio, and it's probably right here worth taking.
You know, it's weird that Kramer went super bullish on Tesla at these elevated prices in the 200s, because he wasn't really singing the praises at 160, 170. His argument is that robots and FSD is real and it's a big story and it's starting to come together. I don't know. It feels kind of weird just like, randomly saying it right now. I guess he thinks that it's so real that this dip is like the best opportunity, which he might be right on. But we're going to have to see, right? We're really going to have to see if the market is willing to still give Tesla that love. Meet Kevin. I tweeted this yesterday. I watched his Tesla video. He is very bearish on Tesla. And he believes that Tesla is going to 180, and he says 180 is generous. So he's looking at it from a technical perspective. His big argument, though, outside of just the technicals, is the robotaxi event being delayed. So he said that robotaxi event being delayed basically took the wind out of everything with Tesla. I don't know if I necessarily agree. I think it hurt a little bit of the momentum. Like, it would be awesome in 2 weeks if we had a robotaxi event, but I don't know if that is the reason it's suffering. His argument is that's why we should. Basically, forget Tesla. He's expecting an entire crash. So his perspective, to give you guys perspectives of other people that are out there, he thinks an entire crash is coming. He thinks we are going to get a smaller dead cat bounce, and then we're going to crash after that going into the election. And then after the election, we start to rally again. Maybe that happens. Maybe that doesn't. But that is his argument. Now, granted, a little bit of context. He said the same thing in March when Bitcoin was at 74,000. He thought we would get a pretty gigantic crash, and then maybe, we would settle in. That crash didn't really happen. I mean, in April, we had Iran and Israel, which lasted for like a day or two, and then we just went straight up. So I don't know. I don't know if we are in the ballpark of saying it's time for a legitimate crash. I think a correction of 5%, we were down 3% yesterday, so another 2 to 3%, like, that's possible. It's very possible. I just don't know if that has to happen, given earnings will still be producing the results that they need to produce. I asked a poll yesterday on Twitter, 3,200 votes. Do you think we sell off then bounce, or do you think we correct 7 to 10%? Kind of split 50-50. So there's not really, if there was like a correction of 7 to 10%, 90 to 10, I would say, oh, so the consensus thinks we're going to get a crash. Maybe we go against the consensus, but it's really 50-50. I think everyone's kind of confused right now, which is why today's going to be an interesting market open, because all of us are just trying to, figure the hell out. Well, like, is it actually a bounce? Because dip buyers have stepped in every single time, like quite literally every single time dip buyers have come in and they've saved us. When things got a little choppy? Or does the market finally say we're just going to chill out and we need to be proven before we can decide to show some momentum. And I guess it's going to be time to see if that plays out. Okay, cool. So that's what we got in the context of some of the macro stuff. Sam says Disney might be a crazy mean reversion trade, in my opinion, at a decade-long support here going into earnings and their event in August. What do you think, Amit? I have historically never been a fan of Disney. I do think the technicals are attractive on Disney, just given that it's been, as you said, at that decade-long support. Also, Disney is up slightly from last year. Disney at 89. It was 79 in July of 2023. So really, it hasn't moved dramatically. I think it went up to like 105 and then came right back down. It's been relatively flat, so it's been consolidated within a range. However, if they show lower subscriber numbers on Disney Plus, if they show the parks are growing but not as much, I mean, it's just like the growth curve for Disney has never really been there for me. I've never seen it. I also just personally don't use Disney Plus, so it's hard for me to imagine it's growing dramatically. That's the part where I get worried about. They also don't have Hotstar anymore, if I'm not wrong. That's like out of their subscription bundle. So those are the parts I'll be worried about. But I do think it's, at the point where it's low enough where nibbling in is not the worst thing. I just think if they don't have the right growth estimates, then it's not going to perform the way people want to perform, especially if the market's taking a little bit of a pause. Cool. Okay, so that's what we got. Let's look at some of the other stocks. Crypto. So Bitcoin conference starts today. Saturday is when we really have the main speakers get on stage. Trump is going to be speaking on Saturday. Now, Bitcoin fell from 67 to 64 yesterday. So what's interesting about Bitcoin is as the market was collapsing yesterday, Bitcoin was running. And it was interesting. It was kind of like Bitcoin was a little bit of a flight to safety. People were saying, hey, I'd rather be in crypto than I'd rather be in the NASDAQ. But if you looked at Bitcoin historically, it always follows the NASDAQ. Like growth stocks come down, Bitcoin follows growth stocks. That's why Bitcoin bottomed in June of 2022, because the NASDAQ also didn't bottom exactly June 22. It bottomed in October, but still 2022 was really bad for the broader market. So it makes sense that Bitcoin fell yesterday night, about 3,000 points. I would be interested to see if we get a little bit of rebound here. As you can see, we're green right now in Bitcoin. Rate cuts are good for liquidity on Bitcoin. The economy growing is good for disposable income being able to enter into Bitcoin. The Bitcoin conference is obviously a massive tailwind for Bitcoin. But if the NASDAQ falls another 3%, QQQ in the pre-market right now, it's up a little bit. Again, that GDP number helped it. It's hard to imagine Bitcoin stays afloat if the entire market collapses, which again, I just don't think there's enough momentum to get people to collapse the entire market. As the NASDAQ to 430, which is a technical level it could hit, which would be about 6 to 7% down from here. That would be very painful. You would have Google at that point probably go to like 150, if not lower than that. You would see Meta definitely go below 400 if that happens. I think if that does happen, the contrarian argument here, the GDP number was 2.8 for those that are running versus 2. The contrarian argument here is that would be pretty healthy. It would be pretty damn healthy to get a kind of flush out of a little bit of the frothiness going into a rate cut cycle and an election cycle, because then once those uncertainties become certain, you've got companies that are trading much. I mean, Meta at 350 is way more exciting than Meta at 550, right? People are going to step in, especially if it's still a bull market and we're not in a recession. And theoretically, if we have the rate cuts, we should be stopping a recession. The idea that we get 3 rate cuts now, given the Fed letter that came out yesterday from the former Fed president around why we need to be cutting in July, I mean, the 3 rate cuts kind of seems likely at this point. And if we get those 3 rate cuts and it's not as reactionary to some of the numbers that we're seeing versus anticipatory, maybe that's good for big tech as well. Again, I don't think we see the NASDAQ at 430. I just think that's a little bit too much of a sell-off for a market that has way too many tailwinds. But we will have to end up seeing how this plays out in the next coming weeks. Cool. Okay, so that's what we have going on right now. 3 this year. Yeah. A lot of consensus is still 3 this year. I know the market is pricing in 2, but if we start to see the economy weakening, then 3 this year is not crazy, in my opinion, either. It's just a question on if the market has the appetite to actually get us there. Okay, let's hear a little bit as well from where we think the big tech rotation is coming from. Here is Jeffries that is very bullish on Microsoft and their perspective on the rotation and how it's playing out.
Its worst day since October of 2022. That wasn't that long ago, and it's a terrible period. Remember back then we hit some lows, led largely by underwhelming reports from Alphabet and Tesla. Joining us now, Brent Thill. It's very easy to say Brent Thrill would be very close. Does that ever happen to anyone, Brent? You're an analyst at Jefferies. I mean, I have a little
inside of tech. We've seen a huge outperformance of semis and the internet. You've seen underperformance of software. And so our belief is software in the back half of the year will start to begin its move back up based on the underperformance and pretty good results. So if you look at last night, again, two bellwethers in software, good numbers, no signs of massive demand cracks. I think we have an overbought situation in a lot of the semi names. You've seen such a massive run. Many of those names are up between 40 and 100%. Internet was up about 10, software up about 2. So again, I think you're seeing a little bit of everyone out of the pool yesterday, timeout, reassessing where they want to go after their swim time. And we believe, again, there's going to be a mini rotation. Nothing to take away from semis, and we think the fundamentals are alive there. But right now, I think ultimately we've seen money come out across the group, and a lot of that money actually went into financials, industrials, other subsectors beyond tech. So that's what we saw yesterday. Again, a couple of good reports last night. So our belief is a lot of the clearing event has been put in. And there may be a little more to go in terms of the rotation. But again, we think there's some attractive subsectors now, like software.
Is there a something you can point to definitively for what makes the Russell 2000 suddenly more attractive to people? Is it an interest rate cut? Is it the notion that maybe the AI craze has gotten, at least for the main players, has gotten a little bit ahead of itself, and you're looking for maybe beneficiaries that are further down the chain? I mean, what do you attribute it to, and how far will it go?
Well, just as I see it inside tech, and that's my seat, I think you've seen just an overcrowding in a handful of names: Amazon, Google, Microsoft, right? So there's a broadening event that's going to happen. That's number one. Number two is what you said on the rate cut. That should effectively help. 3 is the increase in M&A. So we're seeing a material pickup in software M&A. You've seen a number of transactions from strategics and privates. Obviously, a lot of the smaller mid-cap names downstream, they're not buying the large ones because we can't get those through the regulators. So we think there's a number of factors in helping that out at this point.
It's pretty interesting. Do you, in your view, think we've overspent on AI, underspent on AI, or just the right amount? And how far down the road do you have to look before you see the payoff, do you think?
Yeah, the payoff is still years away. So if you think about all the software companies this year, Joe, are saying no revenue in AI in 24. So the ramp really begins in 25, 26. Microsoft is leading that pack. We think they're in a phenomenal position. It could be a low single-digit % of their total revenue stream this year and grows going forward. So it's still a ways out. We are definitely at the beginning of the curve. We have to spend. As Microsoft has said to our investors when they've asked how much you're going to spend, do you want us to get 6% market share in AI or 60? And so we're at the beginning of this curve, and I think many have the analogy of this was the internet beginning in the 90s. This is the move to cloud, the move to SaaS. Would you want to spend more money in the front of the curve or the back of the curve?
So I know this narrative, we've heard it all over, this year, this narrative that you want to be spending enough to build out your AI infrastructure because you want to be ahead of the pack and be at the front of the revolution. But on a day like this, where it's a red day, I think it's important to just remember that if that revolution is real and the market is, you're buying a stock for its future cash flows, then you're buying Microsoft, Google, Amazon, et cetera, today because you believe that as they build out that CapEx infrastructure, there's going to be momentous revenues in the future if AI is actually real. Now, if you don't believe AI is real, you just don't buy those stocks because they're spending so much money. It's almost insane how much they're spending on something that's not going to give a return. But if the research is correct on where AI is going and what that monetization will look like, then it makes a lot of sense for these companies to be spending a lot of money. And if the market gives you opportunities where they irrationally sell off these companies off that reason alone, not because they're missing their numbers, but because they're spending too much on CapEx, I think that's a dip opportunity at the end of the day. Maybe not at these levels, because again, they're a bit elevated, but if it gets really egregious, we know why they're spending this money. Here's what Ruth, the CIO at Google, said on the earnings call. With respect to CapEx, our reported CapEx in the second quarter was $13 billion, once again driven overwhelmingly by investment in our technical infrastructure, with the largest component of servers followed by data centers. So that's good for SMCI, Dell, NVIDIA, etc. Looking ahead, we continue to expect quarterly CapEx throughout the year to be roughly at or above the Q1 CapEx of $12 billion, meaning they're spending $50 billion a year for the foreseeable, I would say, 6 to 8 quarters to build out the data center infrastructure. Keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx, and that's kind of her core argument in regards to CapEx. I think Meta is going to say the exact same thing with Microsoft, same thing with Amazon. They're going to say, hey, we're spending XYZ percentage of our revenue because we need to be first to this game. We're the only companies in the world that have this much money to spend on CapEx. No other companies can beat us at this. We might as well spend the money if we have the money. We're giving you guys a dividend. Like, it's not like we're not giving anything back to shareholders. Our stocks are up at least 20% year to date. So we've rewarded shareholders. We've done what we needed to do. We've bought back so much damn stock. Like, instead of buying another 20 billion shares of our own stock, or $20 billion worth of our own stock, maybe we should invest it in the future so we survive as a company over the next decade. And if everyone believes that AI is the way to survive, then that's a narrative that can't be ignored. Notice another thing. This is not Meta spending on the metaverse. You got the market open in 3 minutes. This is Meta, Google, Amazon, Microsoft, NVIDIA, etc., all spending on one thing that is the same thing, which to me is a unilateral form of consensus on, hey, this thing really does matter. And it's hard for us to say we don't deserve to spend money on this because it's some random pie in the sky metaverse. And if the stocks dip for those reasons, I don't know if that's a reasonable enough reason. And I think ultimately those dips get bought pretty easily. What is the bear case? What do you guys think is the reason as we get into the market open? What is the reason you think everything collapses? Like S&P back to 490. What is the reason you would say that plays out? Oh, by the way, 12.5. Eric, thank you for this comment. 12.5 FSD, the real freaking deal. So I have a friend on Twitter who actually posted yesterday. He's not a creator or anything. He just owns a Tesla, and he posted about 12.5. Elon actually responded to him, and I'm not going to read his entire post, but I'll read just a small. Someone said Kamala Harris winning. That's the bear case. He just said, where is the post? Right here. So I'll put it in the chat. You guys can read yourself. But basically, he said 12.5 is the real deal, and a lot of people are saying the same thing. 12.5 is the real deal. A little bit from his post. Every single twitch of uncertainty was completely gone. Never a moment of wuss driver, jerky, wheel, hesitive, BS. Not one moment where I felt like the car was a clueless toddler that probably needed me to jump in. This is very funny. I felt zero desire to hover the brake pedal at any point in this drive. I fully trusted the vehicle for the entire duration of this drive, and that hasn't happened ever for me for any version. Elon responds, still some issues with the release, but you can see the magic already. We're pushing it out to those who have requested advanced releases. For regular users, 12.5.3 is probably suitable for wide release. So I know Tesla's selling off, and I know it sucks, but this is someone I personally know, right? It's not like a Tesla influencer who is saying, dude, it's the real deal. It is absolutely the real deal. And if that's the case, that news spreading into robotaxi event, that itself could be a catalyst, not only for Tesla, but for the broader market, because that is a real use case of AI. That is hundreds of thousands of GPUs being used in order for some productive value, which would be FSD, right? And that's a way the market can at least say, all right, AI is starting to become very real, and Tesla might be the main beneficiary of that AI. All right, here we go. We got 13 seconds. All eyes on the S&P 500. Let's see how we open after those GDP projections and where the market goes after its worst day since 2022. Thursday, July 25th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. S&P open slightly green at 541. Slightly green at 541 right now. Where is the NASDAQ? So the NASDAQ fell 3.5% yesterday. The NASDAQ is green at 0.05. It's slightly green. We don't have a mean green candle, but we're getting a little bit of green right there. 463.84 up 0.09%. Meta is green about 0.5%. Google up 0.2%. Bitcoin is up 0.2%. Disney is up 0.2%. Palantir 2577. So Palantir taking a beating. Palantir taking a beating, down 3% on the day. So for those who had 28, 27, 26 covered calls, maybe you're going to be able to survive those. But Palantir is down 3%. NVIDIA goes down. IWM goes up. Look at that. So IWM 0.24% green. CrowdStrike's a little bit green. Bank of America, they announced a $25 billion buyback yesterday. So Bank of America slightly red, but they've had a good run all year. I think they're up almost 20%. Enphase had a great day yesterday. They're down about 1%. SMCI at $700. They're down 2%. SoFi was below 7 in the pre-markets, back above 7. Also, SoFi is part of Robinhood's 24-hour trading now. So I don't know why they were gone for so long, but SoFi's back and you can trade it 24 hours now on Robinhood. Robinhood 21.25. So Robinhood was at $20.85. So that has a nice green candle as we open. We'll see how that plays out throughout the day. But Robinhood is green. S&P still green. QQQ still green. Even though they're slightly green, they are still green. What else do we have? MicroStrategy's down a little bit. Palantir bouncing a little bit, 25.87. It was at 25.75. Chipotle is down 3%. Chipotle, good earnings. Not good enough for the street, I guess. This was up 14% after hours yesterday. Now it's down 3% on the day. TNA, IWM, triple leverage, that's up. GameStop's down 1%. That makes sense. GameStop's probably going to take a little bit of a tumble if things go down. XBI is up a little bit. KRE, the regional banks, they are green. Just now turned green. They were red. Now they open green. What else do we have? Bitcoin 64,000. Google just went red. Meta just went red. S&P just went red. QQQ just went red. So now we got the red candles. Robinhood just went red. Robinhood's up 21.33. So Robinhood's up a little bit more. Palantir back to 26. Boom. Little bounce from 25.71 to 26. So there you go. You got a nice little green candle bounce right there on Robinhood. S&P just went green as well. And then QQQ trying to go green, but it has this red candle down about 0.14% on the day. Not a bloody red day, but it is still red. It's just not a consecutive horrible day. I mean, we have a long way to go, so we'll see if this ends up being bad. Yesterday, as soon as the market opened, I think we felt how bad it was. Although it got worse throughout the day, we kind of felt, okay, like this is going to be a bad day. Today, so far, I know it's only been 3 minutes, but not feeling the pain yet that badly. NVIDIA, though, is feeling the pain. NVIDIA down another 2%. So 112 on NVIDIA, 111.8 on NVIDIA now. Market does look like it's getting ready to offload a bit of NVIDIA. 116 was the trend line yesterday that it was holding for about 2 months. And so breaking 116 was going to be bad. We broke 116 yesterday at 114. Now it's at 111. Now the question is, where do the buyers step in? A lot of people said they were going to step in. Google just going green. If NVIDIA fell, decisively before 120, this is the time. So we're going to have to see if those people were really willing to get in. All the Wall Street firms says this thing's going to 180. So, I mean, if they're not overweight, I would expect them to get more allocation for their clients if they actually believe the research they put out. But right now, this one is falling 2%. Google just went green, 175. So Google's up. And Meta, let's go to the Max 7. Meta, I think, is still red. Yeah, Meta's slightly red. Microsoft's green. Apple's green. Google's green. Amazon is green. Tesla as well. 1.3 is green. And NVIDIA is down on the day. Tesla 2%. Yep, Tesla's up. Tesla is up. RCL had good earnings. They beat on EPS. They beat on revenue. They are currently down a little bit, down 3%. The entire cruise lines, yeah, they're taking a dip. Cruise line. Again, this feels more like the sort of macro sell-off, and cruise lines not necessarily going to do well with that sell-off, which is why they're down. But the earnings on Royal Caribbean were pretty good. Robinhood as well, 21.18, so that's falling a little bit. Where is Palantir? Palantir back to 25.77. So it went from 25.71 up to 26, right back here to 25.77 on the day, down 3%. So Palantir from 29 to 25, basically over the past couple of days, is what we is what we got. Where is SoFi? SoFi opens at 706. That's down, but at least it's not below $6. And then Tesla going green. There you go. 220. 220 on Tesla. Again, the reason I think Tesla's green is because 12.5, it's like really, I mean, let me know if anyone has tried it in the chat, but I mean, 12.5 seems to be much, much better just based on the anecdotal evidence people are saying than anything else. And again, here's the fun part. If FSD really does become like real and like it hits and like it's the only thing that's left, it's going to become exciting because then not only do you have a real use case for AI, but you have Elon basically telling everyone, hey, this thing was going to be 90% software margins, not, 18% gross auto margins. It's here. It's time. Now we just need to scale. And I think investors will get very excited on if that happens. But the timeline for that is the biggest concern. And Elon said the timeline is first half of 2025, which is 7-8 months away. So if really that does play out in the next 7-8 months and we start to see the resemblance of it, I think investors will start to give him a little bit of a benefit of the doubt. And ServiceNow had a really good earnings yesterday, so that's why they're up right now. Yeah, look at that, up 10%. So this is bullish for Palantir. ServiceNow is one of the premier software companies, SaaS companies, $164 billion market cap. Their ability to beat on revenue and EPS, and they actually raised their free cash flow guidance, that proves that IT spending is happening. And Datadog, Palantir, Snowflake, all those companies, they can't thrive unless enterprises are actually spending money. So ServiceNow going up 10% is very bullish for Palantir earnings. It's showing that at least there's money to be able to spend. I'm surprised it's up this much given the market is still, not really in the best spot as per yesterday, but it seems like their earnings were strong enough to keep the momentum going. ARM's down 6%. Yeah, so I mean, ARM should be down 6%. ARM should not be worth more than like $70, dude. Like ARM is stupid. And I've been saying that since the beginning of the year. I've been wrong all year because the market kept pumping it. But the only reason the market has the ability to pump it is because SoftBank owns 90% of the float. However, if semis take a hit, ARM is not going to just be up because SoftBank's squeezing it. Like it is egregiously, in my opinion, overvalued. The growth is just not there. I mean, the price of sales is 48. Even CrowdStrike has a price of sales of like 15. And CrowdStrike is supposed to be one of the most overvalued companies in the market. CrowdStrike right now, 260, a little bit green right here. Yeah, price of sales of 19. I mean, a price of sales of 48 is just like insanity. I mean, it's absolute insanity. Even Palantir, I think, is at like 20 in terms of the price of sales. So ARM will be taking a hit. Let's go to the semis as well. The semis are all down. Wow, look at that. Look at the left-hand side of my screen. It's a bloodbath in the semis. It's a bloodbath in the semis. It's bad. It's bad. ARM is down 5%. Dell is down 3%. Taiwan down 1%. NVIDIA down 2.3. NVIDIA's about to go to 110. It's at 111.6. AMD is down 1.3. SMCI is down 3.8. SMCI 684. This thing was 997 last Monday. So taking a beating. Intel, all reliable, going back to $30. That's expected, down 1.45%. ASML is down. Broadcom's down. Broadcom, also, they did their split. They were at 170 after the split, now at 148. Qualcomm down 1.3%, and then Marvell down 0.36. Micron, let's add that to the list. Micron's probably at 110. Micron's at 107. Wow. And Micron had a great earnings. They grew 80% year over year. I mean, if you're growing 80% year over year and the street can't give you any love, it means there is a potential real rotation out of semis, at least in the short term, that we're seeing right now. Snowflake is down. Yeah, let's look at SaaS. So if you look at semis, all of them are red, at least 2%. SaaS, Palantir is the only red one. Palantir, Snowflake, and Confluent. Snowflake just went green. Palantir is red, and Cloudflare is red. Everything else is up. GitLab, Twilio, Intuit, Mongo, Salesforce, Oracle, now Snowflake, Datadog, etc. I mean, it makes sense. Palantir is the only red one. There were so many days where Palantir was the only green one. Obviously, Palantir was getting up there at $29. So this doesn't really surprise me that much that it's falling. And by the way, if you're in Palantir, it should not surprise you. I don't think anyone who's in Palantir should be surprised at seeing 29 to 25. Like, even when it was running to 29, all of us in the chat, like on those euphoric days, I think we all made sure that we told ourselves, hey, this is getting up there. We know it's getting up there. We know there's been no fundamental catalyst yet. So this could just be pure, speculation on the nature of what AI is happening, where AI is going. And I think, quite frankly, all of us feel 25 going to earnings is way cooler than 29 because the expectations of 29 going to earnings is just hard to live up to. So not that crazy to me. Now, if we go down to 22, that would be a real collapse on Palantir. That would be a very real collapse. Yeah, a lot of you saying you're not surprised. Yeah, I don't think any of us are. I mean, like 29, we knew. It was just like it came out of nowhere, and you can't have that last forever. But if we fall back down to where we were after Q and earnings, that's where I would be like, oh, institutions have to be selling at it. Like, there's no way we get down another 10 billion from here unless the toots really think there's an issue, which I would, selfishly, I mean, if we get back to 21, I'm buying another 1,000 shares. Like that would be very exciting, but I don't know if we get that low. And I don't think we get that low unless earnings is really bad. Snowflake's green, Oracle's green, Salesforce is green, Mongo 246, CrowdStrike a little green right here. ServiceNow, big winner in SaaS, up 10% on the day. The semis really are taking a hit. NVIDIA at 112, recovering a little bit from 111. Tesla's up 3.2. All right, not bad. Dip buying on Tesla, at least so far yesterday, was not the worst idea. I think I dipped my toes at like 219 on Tesla yesterday, bought a couple shares, but 222 up 2.94%. If 12.5 is the real deal, then maybe we really do see less pain in the context of this dip for Tesla. Come on, Amit. So many people in the chat were saying 2750 was the floor. Well, even I felt like 2750 was the floor. But again, you have to change your mind based on how the price resolves. And I think we had good reason for why 2750 could have been the floor. We went 3 weeks where 2750 was not unbreached. People forget July 5th, we hit 2750. And then since then, we did not go below that. I mean, you talk about 21 days of a consecutive close above 27.5. That's enough evidence to at least think, hey, maybe we're past, what the previous floor was, which I think the previous floor you could call it was 2250. However, if the entire market takes a dip, it doesn't matter if you're CrowdStrike, Palantir, SoFi, Carnival Cruise, Robinhood, Google, Meta, Apple, everything's taking a hit. The question is it a sustained sell-off? If it's a sustained sell-off, then we have to find a new floor. If it's not, then we get a bounce, as we're seeing right here. Palantir trying to make his way back to 26, and we make new levels. But 2750 held on really well for a good amount of time. The question is just now if the entire market's going to take a hit as well. Have to change your mind if you are wrong. True. Yeah. 1000%. S&P, where's S&P? S&P right here, 541. So S&P is basically green right now. Holding 541 is good on the S&P. If we, take another 5% dump, we're probably getting to 525-ish. But if we hold on strong, then maybe we gap our way back up to 545 over the next couple of days. Palantir below 22 after earnings. Maybe. It's possible. It is very possible if they have a crappy earnings. And also, here's the thing. If they have a good earnings and the market is like actually selling off, then yeah, I could see Palantir below 22. I could definitely see that. I think that would be a great dip opportunity if the thesis has not changed, but the market's just being stupid. But I don't know if we actually get that low going into earnings. IWM is green. There you go, folks. IWM is green. Small caps up 1%. Wow. Small caps up 1%. Tesla up 3%. CrowdStrike up 2%. SoFi up 0.5%. And NVIDIA down 1.18%. 1.18%. Billy says we get a 50 basis point rate cut next Wednesday. That would be the surprise of the century if Jay Powell comes out and says, hey, we're cutting rates in July. I don't think he does that. If he does do that, that would be pretty exciting. I don't think he will. But if he does, then he's definitely going to have us bounce in August. 2130 on Robinhood as well. 2592 on Palantir, Tesla at 221. I realized over the past year, I would say 2 years of managing my own portfolio, that if I ever go on a date with a girl and she says, hey, what do you do for a living? I'm just going to tell her I work in private equity. And that's how I'm going to impress her, because I privately manage my own equities. And so I think it's appropriate for me to say, you know what, like when it goes down, I manage my equities. When it goes up, I am a private equity manager. That's what we do. And hopefully that's impressive. Someone said they closed their short for 40%. I know someone else yesterday that was short, and they made a good killing yesterday, but they closed it because they didn't want to get greedy. So shorts yesterday definitely benefited a decent amount. Wow, small caps really running right here. 219 on IWM. Palantir 2589, so it bounced from 2564. And then S&P is green. Where's the NASDAQ? Where's the Qs? Qs are holding up, dude. They're down a little bit, but they're not really collapsing. I mean, Mag 7, Meta's down, Google's down. They're all down, but they're not really collapsing today enough for the indices to be down. Tesla's the only one holding up out of the Mag 7. The rest are down. And again, Apple at 217, I don't think is crazy because Apple was at 160. Did Apple need to be 235? No. Does it need to go down to 170? No. So like holding, even 210 is not the worst thing in the world for Apple. It'll suck for people that bought in at 220, 225, but it's not like if you objectively look at that, you think, oh, that's a ridiculous price. Whereas at 235, that felt a bit ridiculous. And at 167, that felt a bit oversold. So if we just normalize at some basic levels, I don't think that's a bad thing at all going into August. Bro, you made the same comments like 6 months ago about the private equity. Rodolfo, there are new people here 6 months later, and I don't appreciate you telling them that I recycle jokes, okay? A lot of people didn't notice until you said that I recycled that joke. And so I don't have that many jokes in me, okay? Sometimes they mature out over, I figure out the delivery a little bit better after 6 months, and then I deploy them. I'm using the word deploy so much. Like, I don't know, I think it's because I'm like reading Palantir's like documents for deployed engine. Like I'm using the word deploy in everything. Like even internally, I'm like, all right, I'm going to deploy the alarm clock at 5:30. It's like, dude, like shut the fuck up. No, you're not. You're turning the alarm clock on. You're not deploying the alarm clock, you fucking douchebag. But I'm saying deploy every day. Tesla 221, Nvidia 112, CrowdStrike 261, ServiceNow 820. Wow, ServiceNow is up 12%, bro. Holy guacamole. This is bullish for Palantir, dude. ServiceNow is a very important company when it comes to IT spend. And they had good numbers. It's not like they blew their numbers away. They had decent numbers. But the market giving them some love here, definitely good for the broader SaaS sector. Douglas says, I can confirm FSD 12.5 is awesome. Drove it yesterday way better than 12.4. Yeah, and look, the more anecdotal evidence we see from people like Douglas saying, hey, 12.5 is the real deal, the more bullish it gets that Tesla is undervalued at $704 billion, if you believe in that broader argument that FSD takes over the world. Let me ask this question based on the concept of FSD. So Farzad, I know you guys know him, friend of the channel, he said yesterday, and he said this before, but I'm curious if people agree with him right here. So Bernstein said this yesterday. Bernstein said yesterday from their research desk, if you believe what Elon said about robotaxi, sell Uber. If you live in the real world, buy Uber. We will know more on 1010. Very passive-aggressive statement by Bernstein. But still, Farzad says, if FSD works and Tesla launches robotaxi, Uber and Lyft are dead. And here's his reasons. A, it's cheaper. Higher cost of driving goes away. Luxury, privacy, customized entertainment. Safety, self-explanatory. Convenience, cars can sit idle at a much cheaper cost when drivers can, will make getting a car cheaper and faster. E, Tesla already has an app. Therefore, the deployment of the robotaxi fleet will be much easier and much smoother. Do you guys agree? If Tesla launches robotaxi, are Uber and Lyft actually dead? I think it's a stretch to say they're dead. I think it's a little bit more gray than it is black and white. But I also do agree if robotaxis work and 12.5 is a real deal, and then you get to 13 in 6 months, and then 13.5, and it's legit, like self-driving is solved in the year 2025. Why would you call an Uber over a robotaxi? I mean, the privacy you get, the safety you get, etc. It does seem like the only reason you would call Uber is because a robotaxi is not available, right? That would be, I think, the biggest issue right now. And so I guess we'll agree. Tyler says Palantir should be in there buying back stock. Well, that's an interesting point. Do you guys think Palantir should be buying back stock right here at $25.95? I don't know if they need to be buying back stock right here. I wouldn't mind it. But I mean, below 23-ish, I'm a big proponent buyback. Another Robinhood, who has authorized $1 billion in buybacks, they could be buying back stock right now as well. So actually, both of them could be buying. I think Robinhood's a much more easier buy at 21, just given the valuation. Palantir still a little bit up there to buy back. If we fall below 25, I get much more excited for it. But at 26, I don't know if they need to be buying back stock right now. Some of you are saying yes, FSD, if it does come down, if it does go out, then Uber is dead. Yeah. I mean, so I don't think Uber is dead like immediately. Pouncer right here back at 2608. I don't think Uber is dead. I think that Uber is going to see some weakness, and so investors might start discounting their future cash flows a lot more heavily. But I don't necessarily think they're dead. Uber right here down 1.69% as Tesla goes green, up 2%. But I do think places where FSD doesn't exist, like in India, where Uber exists, like more, people are going to still call an Uber. But obviously in the more North American parts of the world, the places that have more disposable income that can pay more for an Uber, that might take a little bit of a hit, especially if the robotaxis are cheaper. There's so many times I'm calling an Uber and it's like $15 for like a couple miles. And it's like, if FSD could be like $7 or $8 and it's just faster, like there's no way I'm calling it, because like people just don't want to pay that much for a car ride. It's just not that important. Downloading FSD 12.5 right now. Can't wait to test it out. Yeah, let me know. For those that drive it, let me know in the coming days and weeks in the stream. Let me know how it goes, because it seems like a lot of people are feeling it's a very, 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 very different experience. AMC, Tesla right here is up 3%. AMC is up 4%. Robin at 2130. Is the market rebounding a little bit? S&P, yeah. Look at that green candle, 541. It's holding. QQQ, it's also up 461. I mean, it's down on the day, but the green candle is up from 461.03. Here's another question. Is this, if we end green today, a dead cat bounce? Is this a dead cat bounce? Meaning, let's say we go green on the day. Is the market weak enough to the point where it's green, but it's not really green to say that we've kicked the trend of the worst day we've had since October? Curious what people think on this one. Didn't you buy your lady a Tesla, Mitt? Have her download FSD. I did not buy my lady a Tesla. I just, it's funny. First of all, I don't have a lady, so there's no one to buy a Tesla for. But I did have a good tweet yesterday. I think I told you guys. I said, based on the CrowdStrike thing, I was like, next time my girl's mad at me, dude, I'm just buying her a $10 gift card. Honestly, you don't have to show her on the gift card. It doesn't have to say how much it's worth. So if she's mad, you just get her the gift card, and then she'll go to Starbucks. She'll try to get like $15 worth of food. She'll use the gift card. The cashier will be like, "This is only $10." She'll get even more pissed. And then you get another $10 gift card. Like the cycle just keeps going from there. But in general, I think it was funny because if I traded in my Honda Civic right now, I bought it for what, 21 grand. I was looking, I could get about 14 grand. And so my dad mentioned, he's like, why don't you trade in the Civic and then get a Tesla for like 35 and just finance it? And I thought about it for 1 second, and then I was like, dude, I do not want to have another car payment. I don't want to have a car payment again. Like, it was like, I paid off my Honda like 3 months ago. I'm done. It was the first car I bought, blood, sweat, and tears, put the down payment on it in 2019. I worked my ass off to pay off that car. So I just don't, as much as it would be nice to get a Tesla and like have it officially as a car. Palantir back to 2615. Nice bounce on Palantir. I just don't want a car payment. That would suck. That would really suck. Lesson from the stream: don't take love advice from Mitt. I think it's good advice, dude. I think get her a $10 gift card and like things will be okay. I think it's not the worst idea. Oh, we got a Robinhood news. Robinhood just introduced joint investing accounts. Joint investing accounts. Gene, thank you for sending me this. I'm just seeing it right now in my DMs. Robinhood just introduced joint investing accounts. Why is this important? Because customers will seamlessly manage investments with their partner while keeping their shared assets in one place. So this is a feature that people are waiting for a long time, which means you can basically invest with like your wife, your girlfriend, whatever it is, with one joint account. Can friends do this together as well? Can you make a joint account with like a friend and manage the account? This is interesting. I don't know if you could do it with a friend. Well, I know theoretically you should be able to do it with, I don't think they have to have like, yeah, I think you should be able to do it with anyone, to be honest. Okay, I think Schwab and Fidelity have had joint accounts for a long time, though. So this is like a new feature of Robinhood, not a new feature to the other brokerages, but it's good for Robinhood. This and tax lots we should be getting by the end of the year. So those two are going to be really big features for Robinhood. IWM is now 1.12. IWM is up 1.12. SPY is flat. Tesla's up 3. And then Palantir right back to 26 after falling from 25.87. But IWM is the winner, folks. CrowdStrike's a little green. ServiceNow is obviously green. SoFi is up 1%, but IWM is the green in the still sea of red that we're seeing, even if it's not as red as it was yesterday. Trade in your Civic for a Hertz Tesla rental, probably the same price. Yeah, but I want to own the Tesla. I want to own the car. I don't want to just rent it. So again, I just like, dude, I just hate having a monthly payment. Like, I want to get rid of all my monthly payments that I have and just be like out of debt. And the Tesla one, I was done like 4 months ago, and it's so nice not having to pay $300 every single month for the car. Joint accounts for married couples is extremely important in some states like Florida because it's protected against net lawsuits against one partner. Interesting. Wonder if this makes TJ's life easier. Yeah, potentially, because he's wheeling on multiple accounts. My friend was managing a joint account with his girlfriend during the pandemic, and when they broke up, she took it all and ghosted him. Dude, that kind of sucks, dude. Could you imagine you doing all the work to manage an account and then you break up with someone and they leave you? I think when you officially know you're going to marry someone, like you're really going to be with them for a long time, then you do the whole joint bank accounts and all that stuff. Like, I feel like you've got to be dating someone at least 2 years and you're both seriously thinking of marriage to share your finances so explicitly with each other. It doesn't mean during those 2 years you're not like sharing stuff and paying for stuff together, but like officially, like, you know, XYZ bank account under both names. I feel like it's got to be marriage level. Otherwise, that's like risky. Because people break up, dude. Like, that shit happens. Amit, what brokerage do you use in Canada? So I'm in the States, so I don't know what people use in Canada, but I know Wealthsimple is one of the main ones that people like in Canada. But Robinhood, unfortunately, is not in Canada yet. Could Robotaxi deliver food? I think they would try to beat Uber Eats at their game. I think that would be the inevitable conclusion, to an extent, potentially. It's probably not going to deliver food immediately, but they're going to find ways to like get this. I mean, there's already drones starting to deliver packages with Amazon. Like, I think a lot of this is heading towards some level of automation and removing the need for the driver, which is going to be tough for drivers. Tesla right here at 220, because drivers, I mean, driving is one of the most, it's the highest. I think it's the truck drivers is one of the highest number of jobs in the United States. Like, driving is taxis, Ubers. That's a big part of the economy and the population. MicroStrategy, wow, down 10%. Holy crap. Bitcoin taking a beating right here. So when that gets replaced, we definitely are going to see a lot of that revenue go to a company like Tesla. What else do we have? I couldn't even share an account if I was married. I mean, if I'm married, if I'm married, it depends on if my wife actually like cares about stocks, but I'm just going to manage all of our money. Like, at this point, I'm just going to where it's all going to Palantir anyway. No, I'm just kidding. It's like I will just manage all of our money. And so I would feel pretty comfortable just doing it that way. Now, if she cares, that's fine. If she doesn't care, then it's whatever. But, we'll see. And in general, I would be comfortable just having everything together and managing in one place. But we would have to be like legit married, for that to happen. If not, that would just be weird if I'm managing our money and we're not actually like serious. Per Elon a few minutes ago, 12.5 will contain Smart Summon next month. Google at 169. Holy crap. Google's in the 160s. It's 171. If it gets to 160, dude, if it gets to the 160s, that'll be interesting. Now, again, I think Google goes probably to 150 if the NASDAQ really takes a hit. QQQ's down 1%. All right, so there's the red candle. There you go. There's the red candle and the Q's down 1%. You see that green candle trying to fight that off. Everything's starting to go red now. Palantir back under 26. Tesla losing some of its gains. S&P just went red, down 0.25. So now we see, now is the moment if the market can fight back against some of the red. But this is the red, folks. Here it is. It's happening. NVIDIA 109. Yep, there you go. It is happening. Here we are. NVIDIA's down 4%. 140 to 109. The red is here. You see how these green candles on any stock I pick are like fighting against 4 consecutive red candles, whether it's NVIDIA, it's Google, or you got the S&P right here, a little bit of green candle. Now's the question if the dip buyers are coming in. Are they coming in? Amit, are you holding any Palantir puts? No, I'm not holding any Palantir puts. Someone who should have held their Palantir shorts was what's his name? Chris, dude, I'm so happy Chris didn't. Chris would be bragging so hard if Chris held his freaking short, dude, he would be bragging. He would be in the chat. You guys wouldn't get enough of him in the chat. Thank God Dan Ives upgraded us and Chris realized he had to get out of it. If not, it would have got ugly. It would have got very, very ugly. So tell Chris conviction matters. Well, the thing is, he has a lot of conviction on this. The problem is he realized that like the Palantards are real. And so he just got too scared. He got too scared. He closed during the Dan Ives $50 raise. Yeah, the $50 price target really scared him at that point. And that got him upset. All right, S&P at 539. QQQ now down more than 1%. So here you go. We are officially seeing the red. This is where it's supposed to get red. This is where the market now is to fight back. If we can't fight back against this, then we're in a little bit of a tough spot. I saw this meme yesterday. I got to share this meme. This was the most hilarious meme ever. Okay, I saw this. I started dying. This will hopefully help you deal with a little bit of the red. Dude, this shit had me dying, dude. I saw this yesterday. This had me dying yesterday. I saw this yesterday and I legit I couldn't stop laughing, bro. This is the funniest thing I've seen all year. Like, because like it encapsulates all of our emotions, right? Like all of our emotions are just like, oh my God. With it, like we need a bounce. That was the best meme. That was the best meme ever. What do the NVIDIA cash good put premiums look like? All right, let's go to it. Let's go to NVIDIA. Let's go to the beautiful dia of the envy and see what it says. All right, so NVIDIA is declining pretty badly right now. So cash good puts, let's do August 23rd. I think that's right after earnings. Wow, look at that. You can get paid. Oh, wait, no, there's the calls. Let me sell puts. Sell puts. You can get paid for $105. You would get 480. So 480 divided by 10,500. That's a 4% return. 4.5. Not crazy. If you buy at the money, you're looking at 6% return. It's not amazing. You get 665. Open interest is 4,000 of those at 109. The put buyers on NVIDIA are definitely making a bit more money than the sellers today. Question is, do you believe NVIDIA's 109 by earnings? See, now the problem is with selling cash puts on NVIDIA is the question fundamentally becomes, hey, do you think the earnings are enough to deal with? The expiration is August 23rd. Do you think the earnings are enough to deal with the downside momentum? Like, are the earnings real? This is 10,000. This is 1,080 pre-split. So if we fall another $8, NVIDIA's down 5%. We're going to the 900s pre-split, which is the 90s right now. The question is going to be, are the earnings so substantial that they can bounce all the way back to 130, 140? And it's like you have to really believe that they pull up those numbers. And even if they do, you know, does it get the street excited? That's the problem right now. QQQ down 1.16. So the Nasdaq's in free fall. The Nasdaq is absolutely in free fall. CrowdStrike 253. So ServiceNow somehow holding up 11%. I don't know how ServiceNow is holding up, but that's holding up. Regionals got a rotation to the regionals. Is IWM still green? IWM is still green, even though we're red. But the broader market is down. S&P along with QQQ is down 0.5. Wow. There you go. Market selling off. You can't, I mean, can't be too emotional about it. The market wants a little bit. Market wants more clarity. They want less frothiness. And quite frankly, we're still up a lot for the year. Again, if you're in NVIDIA, you're probably in at, you know, $60, $70, $80 averages if you've been in there for a while. So you can't really complain on a 5% down day, but it is getting rid of a lot of the froth that was there over the past couple of weeks. Meta's below 450. Yeah, Meta's earnings, I don't know, dude. If Google's not going to catch a bid after saying they increased CapEx and they beat on earnings, Meta's going to have to really beat. And the thing about Meta is, like, they're not going to really beat if Google's not really beating, because they both sell ads. Like we know. Snapchat must be getting hit right now as well. Then Snapchat, yeah, there you go. Snapchat's at 13.19. Snapchat's not going to get too much momentum if Meta's not getting momentum. And so we should expect the worst for Meta, 420-ish on earnings if this sell-off keeps going on. Robinhood launches joint investing. Yep, we covered that. That's super exciting. And so if you have a partner, you'll be able to manage money together. Not bad. Now, I think Robinhood, if we get down below 20, which is very possible right here, I know that's stripping out like basically 4 months worth of gains. I know it sucks, but like this is the market, right? When things go red, everything, as bullish as I am on Robinhood, everything takes a beating. I think that's when Robinhood should buy back stock. And I think it's good they authorized the $1 billion in buybacks to start in this quarter because they knew probably that, hey, we might see some choppiness. We've had a really green year. And if we see some choppiness, it probably starts during the historical worst time of the year, which is August, which we're about to get into. And so I would love to see them buy, 10, 15 million shares at 19.50, even at $20. And if they beat on Q2, I think that would be a really strong way to go into earnings as well. Here's the question. Who's buying the dip today? Who's buying the dip? Who do we got? Who's buying the dip? It's not fun buying the dip. It's uncomfortable buying the dip. But, the dip at some point needs to get bought. I don't think anyone has to be super egregious in buying the dip today. If you want to get your toes wet, again, that's fine. Just like yesterday. You're never going to catch the bottom. But right now, given this trend we're seeing on the NASDAQ and the QQQ, it looks like we're still in free fall. And the market is not ready to say, all right, let's do a reverse. Which, by the way, after 1 or 2 days of selling, the market tends not to reverse. It kind of prolongs for a few weeks until we definitively decide to bottom out. Usually there's some type of macro narrative that changes everything. But as of right now, we can definitely see some more momentum. Palantir right here, Palantir 2580. So Palantir still holding nicely in the 2580s. We go below 25, then I would think that's a real, like a real crash on Palantir if we hit 24s. But holding 25, because I never thought 29 was that real anyways. 27 to 25 to me is okay, that's a dip. 27 to 24, 23, I'm like, all right, that's like, there's a correction on Palantir. So let's see if we can hold at 25 level. Ryan Robbins says he can't feel his body. Dude, this is what it really feels like to be an investor, right? I feel like this entire year, none of us really felt what it felt like to be a real investor, because being a real investor means you have to bathe in the volatility, right? Things just don't go up forever. And so it kind of feels like this is the first time we are all experiencing what it means to actually invest our money. You're going to feel volatility. You're going to feel real pain. And that pain is kind of part of the game at the end of the day, which means you might not end up feeling your body. All right, let's check on CNBC, and then we'll keep going from there, see what updates they have right now.
Healthcare. The reason the overall averages are down, though, is technology is a big weight. Again, the information technology sector down 1.6%. NVIDIA is lower. The NASDAQ composite down 1%. So we're now down about 3.2% for the week after yesterday's big sell-off. But S&P down a third of 1%. It's better than yesterday's move, which was the worst since 2022. We'll see how it evolves. Take a look at treasuries after some economic data, which we'll talk about, including GDP. Bonds are getting a bid, even though GDP overall was better. The 10-year note yield, 4.22%. The 2-year yield, 4.4% right now. We are about 30 minutes here into the trading session. Here are some movers we're watching this hour. Shares of Ford tanking after its massive earnings miss, on pace for its worst day now since May 2009. Rival Stellantis also tumbling after reporting an almost 50% drop in first half profits. Tesla's rebounding after dropping 12% yesterday. Watching the airlines, American Airlines turning higher despite cutting its outlook for the year. Southwest also higher, the company beating earnings estimates, but making a major overhaul to its business. More on the airline trade and autos as well on the show later. And then healthcare stocks are also on the move today. Check out AstraZeneca shares. They are dropping despite beating earnings estimates and raising its guidance. AstraZeneca CEO will join us exclusively this hour to discuss the company's outlook. But let's start with the culprit of some of this selling that we've seen in stocks, which is the dollar yen. I mean, the sharp rise that we have seen over the last few days, including yesterday in the Japanese yen, That's never a good sign for overall equities. And what's the connection, you might ask,
Yes,
to
you
a
might
dollar
actually
at
ask,
yen?
Sarah, why would you go there as the reason for the underlying weakness? So
Because
explain.
I will, which is this is the carry trade, what's known as the carry trade, where you borrow in low yielding currencies or sell, which is the yen and has been a very crowded and very popular trade, and buy higher yielding currencies, which is the dollar, because the US economy is doing better than Japan. We've been higher for longer on the rate front. So that's been the gap. That has started to unwind in a very sharp and violent way because Japan is set to raise interest rates next week, and the Fed is set to hint at cutting interest rates next week. And when that unwinds, it unwinds a lot of the popular trades that have been, this is a funding trade, that have been funding the equity market rally. And so I'm not saying it's the only reason, but it's definitely something people are pointing to. When that snaps back, then you see other major trades that have worked, like gold, like Bitcoin, like stocks, all go the other way. So part of the reason I think that you're seeing that plunge. So what are we seeing today? Well, there's a little bit of relief, and potentially that's why you're trying to see the stock market come back. Although there are other factors. We should hit GDP, right? GDP was pretty solid overall at the number. I think definitely better than economists were looking for at 2.8, and they were looking for around 2.1, and also marked a rebound from the previous quarter of 1.4%. Personal spending, which is the engine of growth in this economy, the consumer, 2.3%. Not too bad. And it was a pickup from 1.5% in Q1. And I hate the word Goldilocks, but it was kind of Goldilocks in that the inflation numbers were also more benign. They do core PCE on a quarterly basis. The pricing index was 2.3%. It was a drop from 3.1. If you look at core, if you strip out food and energy, 2.9%. And that, Carl, is a real step down than what we've seen. And certainly from the first quarter, which was 3.7%. So the Fed is going to like this number because it shows them the economy is holding up, the consumer's holding up, and inflation is moving back to target. We'll get sort of a fresher monthly look at PCE tomorrow. But this quarterly number, so far, so good. It's still above target, but it's moving in the right direction. It gives them the breathing room to not feel like they have to urgently cut next week, but they can signal that the cut is coming.
Inventory's added almost a full point.
That's true. I mean, you take that out and it's a lower GDP number, but there were some really strong signals in here. Did you see CapEx? Capital expenditures, 11.6% growth in spending on equipment. And a lot of that was software spending as well. 5.2% growth in non-residential fixed investment, which is also reflects the spending on commercial construction, equipment, and software. So positive signals, despite the fact that inventories definitely made it look better.
Software, but also data centers and chips that go in them.
All
I
of
mean,
it.
my God, the numbers
It's
themselves.
boosting our economy. That's what this is
I
showing.
would expect it would be. When you talk hundreds of billions, that can have an impact.
And the question is it's doing it without an inflationary effect so far. So we're not seeing any kind of tick up in inflation numbers. So that's a positive sign too. Some people think ultimately it'll be very deflationary once it starts.
If in fact, under a benign AI scenario, as Elon Musk likes to say.
A benign AI scenario, I
right.
like that.
You don't want the other side of it, but the benign AI, yes, it's going to be great.
This is a benign economic report, I will say. Initial jobless claims also a nice surprise there, dropping 10,000 to a seasonally adjusted 235,000 for the week. So again,
which again means more unemployment. Like this rate cut is coming. I know a lot of people are going to say, hey, the rate cut should come next week. I don't know if it comes in July, but it is definitely coming in September.
Kind of a soft landing-ish day on better than expected economic data. If you're Chipotle, things are good no matter what income level you're catering to. Listen to what the CEO says about the consumer.
The good news is we are seeing transaction growth from every income cohort, which I think speaks to the strength of our brand and our value proposition.
And then Keurig Dr. Pepper did talk about a little bit of the discrepancy in the consumer.
The operating environment remains uneven, with resilient demand from higher income consumers and value-seeking behavior among low and middle income consumers.
So you really got to be doing a good job to get to the, all consumer income levels doing well now.
I know,
like
but
Chipotle.
even we were talking with Kramer, even with 11% comps at Chipotle, stock's been cut by a quarter in the last few weeks.
I mean, it had run up a lot. It was one of the popular beneficial trades. But just in terms of looking at what they're saying, they're not talking about weakness in consumer spending or pullback, certainly at any of the income levels. You know, guys, I've been tracking some of the luxury players as well, and we did get word from some of the European luxury giants, again, carrying the parent company of Gucci and Bottega Veneta, talking about the different regions in the world. Japan is the star for all the luxury players right now because all the tourists are going there and buying designer goods. But North America, they say, remained in negative territory. Polarization based on brand positioning persisted. Bottega Veneta and the higher end segment continued to outperform, with Q2 retail up 18% in the region. So it's brand specific there. And then Zegna also talking a little bit about the environment. They call the overall environment challenging. And I think that's been a difference in tone from the luxury players.
Oh boy. All right. So, I mean, same thing, the argument CNBC is making right here, Sarah, is that we are headed a little bit closer to that soft landing scenario, given the GDP data we got and the unemployment data we got. But the tech heavy market doesn't care about that right now until they feel there was a return on spending from earnings, from CapEx growth, and they feel that the uncertainty of a variety of things like the Japanese yen and the elections across a myriad of things are starting to get resolved. Palantir 25.89, QQQ down 1.3%. IWM is up, folks. I mean, S&P's down 0.43, QQQ's down 1.5. IWM sitting there pretty, small caps at 0.9. Now, if we close with this dynamic, meaning IWM is up, Nasdaq's down, I think we're seeing a real rotation into small caps. But we need to see if that actually holds up, because you know what likely will happen is by 12 o'clock, small caps will go back down and they'll sell off with the rest of the market, just like it happened yesterday. I hope that doesn't happen. I hope we are seeing a real rotation. That's great for SoFi. That's great for the broadening of the market. By the way, again, the broadening of the market is important. I see NVIDIA right here at 108. It was at 106. NVIDIA year to date still is up 126%. So the idea that SoFi could go up, instead of being down 25%, could go up 15%, and NVIDIA stays flat, that's not bad. That's not bad at all. I mean, like if NVIDIA ends the year at 109 and SoFi goes to like $10, I think that's a really healthy market. The problem is a lot of people don't want that to happen because like more people care about NVIDIA than they obviously care about SoFi. But if we're being objective here, NVIDIA's up 126% year to date. It doesn't need to be up 180%, nor is it that possible that many times for it to end up those levels. But small caps, the IWM, those catching up, the regionals, regionals are only up 9% year to date, and we've had a great year. So if you are a trader, the repositioning of the portfolio into some of those other assets is not a bad idea. If you're long on something like NVIDIA and you bought in at 120, like Steve, good friend of the channel, right? He is super long NVIDIA. I would imagine he would just buy the dip and shut up. And that's pretty much it, right? There's not much more you can do to complain because you already know the stock's up a lot year to date. It's not like NVIDIA's stuck at $70 and it's been stuck there the whole year. So I do think this broadening is not horrible in the broader context of the economy. It's just as painful because a lot of people are in tech and they're seeing a lot of paper gains wiped away. Tesla's still green, 2.5. So Tesla's still holding up. Google trying to hold 170 right here. Where's Amazon? Amazon 177. I think Bezos selling had to be the biggest sign. And it was just crazy to me. Like we all knew Bezos selling, but like we're all still bullish on Amazon. That can only happen if like the market is still raging. But if the insider's selling $5 billion worth of stock almost every other month, then it's inevitably going to take a little bit of a hit. But granted, for people that wanted to dip their toes in Amazon and this thing ran to 200 and it stayed at 190 for basically 2 months and you weren't able to get in, this is a bit more attractive of pricing, than it was before. Van Eck predicts 2.9 million Bitcoin price by 2050. Okay, I hope that happens. That would be nice if we get 2.9 million a coin. We do have the Bitcoin conference coming up. Where's Bitcoin right now? Bitcoin 63.8. All right. It's down, but not down too much. It's definitely not as down as much as the NASDAQ. NASDAQ's recovering a little bit right here. You see the green candle right here. So maybe we get a little bit of bounce. Tesla 221. And then even Palantir, it was at 25.89 like 3 minutes ago. Now it's at 26.13. It might fall all the way back down, but like it's bouncing back and forth. It's definitely not definitively at the lows. Nvidia also at 109. It was just at 106 as well today. I'm not selling Nvidia until I am 71. Okay, that makes sense. I would agree. I feel the same with Palantir. That's what we're gonna do. What else do we have? What else? Oh, where's Hims? Hims, I think, is down probably 3 or 4%. Hims is down. Hims has been resilient, dude. Down 1%. Hims had to deal with the FTC investigation, a short report. Like Hims has really held on, and that's probably because they're also only a $5 billion company, so it's not like it's a large cap or anything that needs to take a hit. But Hims has been a great performer. Also, you guys want to know another company that you guys probably haven't heard of? Dave. Dave is up 325% year to date, and it's not a meme stock. It's a legit fintech. Dave was $8 on January 10th. If all of us had just bought Dave, we would have outperformed pretty much everyone in the market. It's at $32. It's like a banking app for fintech. Market cap is 403 million. I don't really know their moat. I haven't done a ton of due diligence on them, but I saw them the other day and I was like, is this a meme stock? And it's like, no, it's not a meme stock. It's like a legit fintech that is a small cap, but it grew like crazy this year. And this is up 320%. Tanner's always talking about Dave. Okay, so some of you guys might know Dave, but Dave is definitely up a lot this year. AMC is up 7%. Rotation into meme stocks, maybe. That would be. Where's Reddit? We haven't looked at Reddit in a minute. Reddit's 61, down 2.9. And then DJT, Trump, is down 1%. Oh, did you guys see Biden sign off yesterday from the White House? Biden said Biden gave his official goodbye yesterday at the in the White House, in the Oval Office. So he's officially gone, and he's officially stepping down. And so it is Kamala versus Trump. It is Kamala versus Trump. And I think also the market now is kind of like when it was Biden versus Trump, the market kind of knew what they were going to do. Now Kamala versus Trump, although I think Trump probably still wins, it is definitely more competitive than Biden versus Trump. So market's going to have to re-rate that as well. Meta right here at 450 right now as well. Thoughts on Shopify? My thoughts on Shopify are the same. Are they down again today? I feel like if there's consumer weakness, Shopify might not have the best earnings. Yeah, they're down 1.1%. They got to 52 last time on a good earnings, but just not as good as expectations. So I don't trust that after this earnings, they're going to spike up, especially given the sell-off we're seeing right now to like 60 or 70 bucks. If you're long Shopify, like 5-6 years, I think this is a decent dip. If you're just getting in, I think there's better entries, especially with the price of sales of 10 on Shopify. They're growing, but they're only growing 20% year over year, which is good. It's just not like hyper growth or anything like that. But it's one of those companies where it's never going anywhere, right? So even if you don't get the perfect entry, I don't think Shopify, like the amount of businesses that use Shopify, the amount of big brands like Kylie Jenner that like run their analytics through Shopify. It is one of the premier e-commerce companies. I don't think anyone's really selling products on Wix or Squarespace as much as Shopify, but I do think there's better entry. Snapchat 1321, Robinhood back above 21, and then Palantir at 26. Oh, wait. Oh, where's Celsius? Celsius. Wow. Celsius green. Huh. I don't know if Celsius is a buy right now, quite frankly. I would be a bit scared holding Celsius going into earnings because I personally don't know enough about the company. And I think if the sales estimates are off, then the street's just going to tank it. Granted, it's down 50% from March. So like, I don't know how much more downside there is, but I just don't know enough about their internal metrics to think that they're cheap at this price. Remember, Celsius is up 4,000% since 2020. So they went public in 2009. Really, 2019 was the time to buy 50 cents, $1, and then they just took off, right? So at 46, it looks like a discount from 99, but it is still up a lot. And a lot of shareholders that were in, they sold out because they had pretty good gains from 2020. So I don't know about Celsius. Amit, how about SMCI put credit spreads on August 16th? So here's the thing about put credit spreads. If you do a put credit spread, I think the way to not lose is to make sure you have enough collateral to save the put credit spread if it goes wrong. So for those that don't know what a put credit spread is, in its most basic terms, you're buying a put and selling a put on top of each other. So when you buy the put, for example, let's say we buy a $40 put on Celsius and then Celsius tanks to $35. That $40 put is going to print because when you buy a put and the stock goes down, you make money. You are paying a premium to the market for the insurance on if the stock goes down. When you sell a put, it's a bullish strategy. You don't want the stock to go down to the strike level. You want the stock to stay up because then you would have to buy the shares if you end up getting assigned if the stock goes down below your strike price. So a put credit spread is really amazing because you get the difference between the premium of buying the put and selling the put, and you only have to put up the collateral in between the width of the spread. So for example, if I'm buying a put at $45 on Celsius and I'm selling a put at $46 on Celsius and I get 30 cents of premium in between the spread, that means I get $30. I only have to put up $100 because 46 minus 45 is 1. 1 times 100 is 100, which means I just made a 30% return. 30 divided by 100, which is incredible. However, if Celsius falls below 46, then you lose your $100. Like you lose the premium, you lose the collateral that you put up. So you lose $70 basically. And so in order to not lose on the put credit spread, if you have the collateral for the spread that you for the put that you sold, i.e. the $46 Celsius put, meaning you have $4,600 in collateral, you can just close out the put that you bought and capture the premium and then turn the put that you sold into a regular cash secured put. Palantir right here, 2630. So Palantir getting a nice bounce. So I think if you do a put credit spread, the way to make sure you don't like get beat on that is to make sure you have enough collateral to make sure the top of the spread, i.e. the put you sold, actually turns into a regular cash secured put if the stock ends up collapsing. Because if the stock ends up collapsing and you have like 10 or 15 spreads, you just lose all your money. Like there's no way you can there's no way you can roll it until you turn it into a cash secured put, right? So that's the way I would do it from that perspective. The collateral is key for a put credit spread. 100% agree. Can't stress this enough. Yeah, I agree. Because I've done them before and they've done well. And it's an easy way to grow a small account because you're getting a 30% return. I mean, like how the 30% return is not easy. But if the stock falls, then you lose all your money. So you want to make sure you can collateralize it if it falls, if your strikes get hit. Can't you just close the spread? Yeah, but you would lose money. You would lose money on the spread, right? Because now the spread is worth. If the stock falls below your strike, like if Celsius goes to 42, for example, and our put credit spread was at 45 and 46, you're down $4. So you just literally lose all your collateral that you put up. And if you do like 15 or 20 or 50 spreads, you might not use as much collateral as you use for a regular cash secured put, but you're going to lose all of it. Like on a cash secured put, at least you don't lose it, right? You just get assigned the shares and you have to buy it. On a put credit spread, you just lose it. You don't buy any shares unless you roll the top of the spread into a regular put, cash secured put, but you need the collateral in order to be able to do that, right? Otherwise you get hit. Adam Bergman lost $500,000 today and it's all Biden's fault. Yes, Adam Bergman, good friend of mine. He mentioned in the chat he's down $500,000. Well, this is how you know you're dealing with big money though, right? I'm sure a lot of you in the chat are down a decent amount of money if you have sizable portfolios. Like I'm looking at mine right now. I'm down 14 grand. So I'm down 14 grand on the day. For some of you, that's like nothing. For others, that's a lot of money. I know some of you are probably down a couple $100 grand. It is what it is. It's part of the broader markets. It is what it is. But again, I don't think this is one of those things where it's 2022, markets collapsing. Tesla, look at that, 223, almost at 4%. And like the entire ecosystem of tech collapses and, we're holding the bag because it was this massive top. I think the investments in AI and the ROI from AI is too intense. And we're seeing this even as something as simple as ChatGPT for this to be 2021. NASDAQ's recovering right now. It was down to 1.5. Now it's down 0.7. So NASDAQ recovering. IWM is up 1.5. That's incredible. And the S&P went from 537 to 540. So S&P is recovering as well. I don't think this is a 2021 November top, dude. There's too much data, not only in the economy, but also in tech, proving that that's just stupid. Like, remember, 2021 was dumb because interest rates were zero. And on top of interest rates being zero, assets were inflated so heavily because of stimulus, i.e. NFTs selling for millions of dollars, that it caused the bubble. I don't think we're there yet. I think Google's spending $12 billion for a reason. They're not spending it because it's a bubble. So I don't know. I think we're going to be in a much better situation. Amit, do you think unrealized tax gains will be passed if the Democrats win? No, I don't think so. I don't think there's any way they can get that through Congress, but I think they could try to do that. And if they try to do that, that's going to create a much more bigger question, which is, do they have a chance? And I think if they get that passed, that's like not going to be a great thing. It just depends how left, the party really goes. And if they win the House and the Senate, there's a shot. I think it'll still be a long shot. I think there's too many moderate Democrats to let that happen. Again, it would only affect you if you're like making $100 million or more, but it will inevitably affect everybody because taxing unrealized gains is just, to me, is just the most ridiculous thing ever. And eventually it'll find its way into people that have less than $100 million. And also the people that have $100 million, they're not going to invest as much if they know that their investments are going to be taxed before they even recognize any of it. So it's just not going to help the broader markets at all. But I guess we'll see. Got mad and out-traded part of the loss today. Well, sometimes it's a good skill to just out-trade some of the loss. Who thinks there's a chance? Like, who thinks there's a legit chance that we would ever end up in like a communist part of America? Like, I've always felt like there's a very small chance that could happen. Like legit America becomes not really communist, but like it gets much closer to communism than we think it is. Because I know people say we're in communism right now. That's stupid. Like, we're not in communism right now. Like, I know people want to be hyperbolic, but who knows? Who knows? Maybe if things really and you know how it would happen? Honestly, it would happen because of AI. Because if everyone loses their job, people are now going to be asking for the redistribution of profits. And like, at some point, if people start revolting against the fact that they can't make a living, you could have an argument to where people actually decide to fight back. All right, let's go back to CNBC, and then we'll keep going from there.
Was unsustainable. But you flip it, and then you see the move in Russell, which is the most perplexing. The correlation between Russell on an absolute basis and a relative returns to S&P has been highly negative to interest rates. So it's not surprising that when your 2-year rates goes down 40, 50 basis points, then that it does lead to a rally in Russell. But I think, again, that also fully doesn't explain what is happening. I think if you look at some of the moves in derivatives markets, you have this unique situation in small caps of spot up, wall up. In other words, small caps are up, but their vol is also up. At the same time, and that is not supposed to happen. Then you have a significant increase in call volumes versus put volumes, which is leading to flattening skew. Again, pretty rare for a move of this magnitude, right? So I think we are seeing a lot of hints in terms of movement, which clearly point to a significant technical unwind. For example, on systematic side, CTAs were very underweight Russell, and they were overweight S&P and NASDAQ. In a matter of 2 weeks, they've dramatically changed. And now they're actually pretty light on NDX and pretty significantly heavy on RTY. And our point is the reverse can also happen as fast, right? So I think our point is you need to tread carefully. And as far as the rotation is concerned, the single biggest standout is not so much momentum, is not value growth, is not so much the SPW story, it is size. If you look across 3,000 stocks, the single variable which stares at your face across the board is size. And if you break it down in deciles, so you break it down into lots of 50, there's a very, very clear relationship between. And the last point I will say is that it is not just a junk rally. What you find if you dig deeper is that there's a quality bias. In other words, there is a certain method behind the madness as well. So these are very interesting times.
For example. Second, and I want to point this out, there are big concerns about a slowing economy. Former New York Federal Reserve Bank President Bill Dudley's editorial yesterday was the catalyst for this big worrywart crowd on the economy. Dudley suddenly announced that the facts have changed, so I've changed my mind about the economy. He called for the Fed to cut rates next week because the 3-month average unemployment rate was rising. Third, seasonality is a factor here as volatility tends to increase mid-July to October. Goldman Sachs noted yesterday that the inflection date, the date when the S&P starts seeing more down days than up days, is July 17th, with a peak in September and not really flipping positive until the very end of October. Finally, this is very interesting. Historically, most presidents don't have a big impact on the stock market.
Palantir bounce, guys. 2650 back on Palantir.
However, this election may be different. Goldman Sachs had a note out yesterday noting the S&P 500 has been super correlated to Trump win odds lately, noting that the recent change in election probabilities with Kamala Harris, now the Democratic nominee, may be causing some recalibration in portfolios. CFRA's chief investment strategist, Sam Stovall, seems to agree the certainty of the Trump trade appears to be fading. He wrote in a note to clients last week. Kamala Harris, pardon me for the mispronunciation there. So if you look at the multiple re-rating on stocks, on tech stocks, NVIDIA was 47 times forward earnings a month ago. It's now 36 times forward earnings. That's a re-rating. So it's not necessarily the earnings estimates are coming down. The multiples are dropping dramatically. Lilly's, the same situation is happening there as well. Not mega cap tech, but sort of acting like mega cap tech.
It's lumped in as one of the largest market caps, I guess. And we continue. I mean, Meta shares have sold off dramatically as well this week. Again, right in there. The multiple on all these things coming down. I mean, Alphabet back to, if they do 100 billion this year in net income, which is possible, I think, from what they just did, you're talking like 21 times, 20 times.
Yeah, the important thing is the earnings estimates are continuing to rise for big cap tech stocks, but the velocity of the change is slowing down dramatically. So NVIDIA's numbers are still going up, but the rate of change is coming down. And that's a real warning sign for the fundamental people. And that's the catalyst for essentially re-rating the multiple on them right now.
Meantime, got the Russell up better than 1%. We'll see in a bit.
Russell's outperforming this month, the S&P and the S&P 600, the small cap, the higher quality small cap, also outperforming the S&P this month.
See you in a few, Bob. Thank you. Let's get a news update with Bertha Coombs this morning. Hey, Bertha.
Hey, good morning, Carl. A former school district police officer in Uvalde, Texas, pleading not guilty this morning.
Oh, boy. All right. We're getting a little bounce, guys, right here. IWM starting to go down as NASDAQ comes back up. Robinhood 2120, Snapchat 1330, Celsius green, Palantir. Look at that. 2583 to 2649. Really nice, healthy bounce from there. And again, it's moving with the cues. I mean, if the NASDAQ were to fall even further, Palantir would probably fall further. So really the NASDAQ recovering from 1.5 down to 0.5 down. S&P as well was down about 0.5. Now it's down 0.05. So it's recovered a decent amount of what it's lost. And the Mag 7, Tesla leading the way today. Tesla, wow, up almost 4%. Google's down, Amazon's down, Nvidia's down. Nvidia was at 106, now it's at 111. Microsoft at 422, Apple at 216, Meta at 453. All of them down, but not down as much as they were 30 minutes ago. And Tesla, it makes sense for Tesla to be up. It was sold off 12% yesterday, so we're getting a bounce here. Now, again, Meet Kevin thinks Tesla's going to 180. So either this is a dead cat bounce if he's correct and we have more pain, or Street was ready to buy the dip at 220. They felt 12% was a bit oversold, and they're coming and stepping in. So we will see. Amit, what is small cap? Is Enovix a small cap stock? So a small cap theoretically is under 2 billion. That's like the technical definition of it. Enovix is close to a small cap. I would say 2.5 billion. Most small caps are actually even under $1 billion, but the Russell is what you want to focus on. IWM, that is the index of the 2,000 smallest small cap companies that exist. And historically, these companies aren't that great of companies. There's some good ones like Elf and Abercrombie and MicroStrategy and SMCI, etc. But most of them suck. The point is, even if they suck, when rates come down, they get to refinance a lot of their debt. Their tangible book values go up. They get to borrow capital at better rates so they can increase their earnings. Their earnings are already increased against the S&P, which is why Tom is so bullish on them, Tom Lee, because he thinks they're the only sector of the market that really hasn't had momentum in this bull rally. But that is basically what a small cap is. Cool. All right, guys. I think we're done for today. We're seeing a little bit of a rebound. Palantir right here just went green at 2660. Just went green right there. So let's see. I mean, yesterday, I think we had a little bit of this bounce as well. And then by 2 p.m., everyone wanted to just throw their laptops and phones away and never look at their portfolios again. Maybe that happens again today. If not, then it's a nice little healthy rebound. And then we'll see tomorrow on Friday where things go. We'll get money market updates today as well. And so we'll see if money is leaving money market funds. It's the highest it's ever been at 6.15 trillion, or if it's choosing to enter in after selling some of these stocks. VIX is down. The VIX right now is up 3%. It was up 5%. Yeah, so VIX is down about 1.25%, which is good for the broader market as well. Okay, word of the day. Let's see what we've got going on. Yesterday was desideratum or whatever it was. Oh, I don't know what the hell this word is. This word sounds like diarrhea, or it looks like diarrhea. Look at this. Okay, this is definitely something that that I might be suffering from. Logorrhea.
Logorrhea.
Incessant or compulsive talkativeness. Dude, logorrhea? That's so fun. It's like diarrhea, but for talking. I was known for my logorrhea among friends, often dominating conversations with endless chatter. The politician's logorrhea during the debate made it difficult for the moderator to control the discussion. I would say I suffer from some logorrhea. That is definitely is diarrhea of the mouth. Yeah, exactly. This is diarrhea of the mouth. Logorrhea, huh? Incessant or compulsive talkativeness. All right, I've got logorrhea. It is what it is. It's a good word, right? I've never heard of this word before. New name for the channel, logorrhea. My girl's got a serious case of logorrhea. Could you imagine talking to your girl one day and she's just like talking up a storm and you're just listening, you're like, babe, are you sure you don't have logorrhea right now? It's just like, what? Like, because you're talking my head off right now. And then she gets mad and you give her a gift card. Be like, here you go. This should resolve it. All right. Thank you everybody for joining. 3:45. We'll be back. I think Jason will be on today. We didn't get to do Technical Tuesday this week because we had Tesla earnings. So I believe he'll be on today. We'll look at all the technicals for stocks now that things have flipped to the downside. And we'll try to see what's going on in the markets from a technical perspective. All right. That's it for me. I'll see you guys. If you guys want to follow along, any thoughts, I'll probably be on Twitter. So I'll just put that in the chat. You can follow along there. And 3:45. We'll see how the market turns out. Bye, everyone. Thank you, guys. Have a good one. See you in a few hours.